Hi, my name is Diana Britton, Executive Editor at wealthmanagement.com. I'm here with Bill Dalton, Head of RIA Custody Sales at Goldman Sachs. And we're here live at the Wealth Management Edge Conference. We're talking about just getting kind of an update on custody at Goldman Sachs. Bill, thank you so much for being here.
Yeah, thanks for having me. It's awesome to be with you, and it's been a fantastic event, so congrats on another awesome Edge conference.
Yeah, thank you so much. And so I know I was here with Jeremy last year talking a little bit about the custody business, and I know that you guys have had a lot of momentum since then. Can you just provide an update on where you guys are at?
It's been a really fun year, and we're super proud of everything that we've accomplished. I think for us, it's been a transformational year in building the business. And the momentum, the energy, and all the growth that we've had has been really fantastic. So it's been fun to be a part of. I think our core focus really remains the same, which is building a custodial option that is more boutique and a little bit more high net worth in nature. Mm-hmm. And our goal is really to help advisors solve their most complex problems. So as part of that, I think a couple of the things that are new this year, we've really focused in on how do we fix some of the friction points that have slowed the growth of advisors on legacy platforms. And so things like making alternative investments easier, lending, client onboarding has been really a core investment for us. And I think the second thing has been how do we make it easier to access all of the different parts of Goldman Sachs. So pulling together our colleagues from not only custody, but our capital markets and asset management, banking, lending, research, and I think that's been really powerful too.
Yeah, so I mean, I know that, just in the industry, a lot of things have changed. What are you seeing in terms of, what are RIAs asking for? What are some of the challenges they're facing now?
I think a lot of the kind of macro trends that have been going on for a couple of years have continued, whether it's the capital that's entering the space or the M&A, the professionalization of some of the RIA practices. So there are opportunities and challenges that go along with that. I think my favorite opportunity that exists right now is just the expansion of the target market that RIAs are serving. And I think for Goldman, we feel like we can really help advisors go upstream and work further up the wealth curve, serve larger, more complex families through our solutions. And I think at the same time, there are new platforms and tech providers who are doing the same thing on the low end of the market. So you've got this expansion on both ends that creates a really big opportunity for RIAs. And on the challenge side, I think it's been illuminated how little organic growth there is in the space now. So you've got this big opportunity, but still I think we can help empower advisors to get out there and grow their businesses, and I think get away from some of the reliance on market growth and M&A and really go out and get new clients.
Yeah, I mean, I think you already addressed it just now, but what are you doing to help RIAs address the changes that are happening in the marketplace and meet their needs? Anything else more specific?
So we really have been, since we launched the business, on a 5-year listening tour, it feels like, where we're always out there talking to our clients, getting their feedback, and then we try to build and implement to help solve their problems. And I mentioned before, alternative investments, that's been a huge area of focus for us, especially as advisors go upstream. And that's been a historically clunky process. And for us, we've spent a lot of time on how do we provide unique access, how do we streamline the subscription process, clean up some of the operational functions on the back end, and automate things like capital calls. And then we've innovated a little bit on the financing side, looking at alts as part of a diversified portfolio and providing liquidity against that. So that's one example. I think another would be on the client onboarding side. So once advisors win business, making it easy to actually get the assets on board. And we've built an onboarding tool that allows you to move an entire household at the same time with a single signature per person that includes account opening and transfers and money movement. And so that's been a really powerful tool to help our advisors get money in the door quickly.
Yeah, that's key. And we're also hearing just a lot more RIAs utilizing alternatives. So
yeah, definitely.
But a lot of RIAs may be, considering Goldman as a custodian, adding or moving, breaking away from, wirehouses and whatnot. What differentiates Goldman out there in the custody space?
My team spends most of our time talking to advisors in transition. So typically a team that's going through some sort of transformational change, whether they're leaving their firm or they're changing business models. And so I think for us, the message that has really landed well is that Goldman can provide the best of both worlds, where you can get all the things that we love about independence, the freedom and flexibility and open architecture and the better economics. But at the same time, they can do that with a big bank brand that makes their clients feel comfortable, and institutional grade products and services, and access to our balance sheet and the safety and security. And so I think it makes advisors and clients both feel more comfortable going through those periods of change.
Yeah, and that trading desk too, right?
Yeah, that it's been a big thing being able to deliver our capital market solutions that look similar to what some of these advisors are used to inside of their current homes.
Yeah, I've been to New York and seen Goldman's trading desk, trading floor, and it's just amazing. What can advisors expect when they're working on the Goldman platform?
I think there's a few things I would go through. I think on the front end, when they're engaging with my team, they can expect somebody that's really consultative and can teach them about the platform and help them understand the capabilities. I think once they decide to join us, they can expect a transition that is faster and more digitized. And then once the assets land, really white glove service and a holistic coverage kind of across all the different areas of the bank. And then lastly, I think we are very focused on how do we deploy our intellectual capital and make sure that you have access to all the best people and thought leadership around the firm. And so that's what advisors can expect when they work with us.
Yeah, I think that's a real differentiator is, being able to access the best of Goldman across the firm. Like, you're not just going to get the custody solutions, but you're going to get all these offerings, across the firm, whether it's asset management, the trading desk capabilities and all that. So
yeah, definitely. We view the custodian as the entry point, and then that gives you access to everything else.
Yeah. Well, Bill, thank you so much for your time. Bill Dalton with Goldman Sachs, and we will see you soon. Thank you so much for joining us.